Can see Hi guys, as you all know, trades like Babs, IC, Mafia, Royal Gang. So today I'm going to be explaining. It's just a continuation of what we said the last time on XAUSD, like the trap before XAUSD goes to $66,000 per ounce. $6,000 per ounce. So in this video, we are going to be covering IC market structure shifts. And if you watch the last previous video, I said this whole sell off that have been happening on gold is just a trap. I said it is just a trap, and it's looking like a trap now because wow, guess what? The sell off is coming to an end. The sell off is coming to an end. I don't really like to complicate my trading a lot. I just make things easy using this three-step model. I see. But if you can see what's forming on the weekly time frame, wow, this candlestick and evening a morning star. A morning star is about to be formed. But it's not we still have to wait for 3 days to confirm that this is a morning star. If the market closes like this, then boom, this is a morning star on the weekly time frame. A morning star is a bullish pattern. And if you are seeing so anything you are seeing on the higher time frame perspective have more ability to hold than from the lower time frame. Anything you are seeing, sorry guys, just to be sure. Anything you are seeing on the weekly time frame or the higher time frame, it has more chances to hold than on the lower time frame. So this is a morning star forming on the weekly time frame. It might indicate a bullish move. Even without that, we already know it with IC. We said as the market broke this high, this high at this point at 4,200. This was where sellers were pretty much at this point. Sellers were at this point. Sellers were at this point. So we said an intention, an intention is the market. An intention is the market showing us his hand. His hand. The market showing us his hand. And how does that happen? When the market breaks an eye, it's an intention that is what going up. It's going up. Why? Why? An eye is an area where sellers are. So when the price is high, just know that sellers are there. If the market breaks above that, it has made the sellers less dominant. So if this was an eye, if this was an eye, sorry guys. If this was an eye at this point, a break above it indicate that this point is less dominant for sellers now. So this is and I said this was our intention. This whole move that have been happening here, this is our intention that the market is going up. And the next thing I said, this whole sell off that have been happening, I said it's a blizzard, it's a correction to give us another wave like this, and that wave should be more than this one. It should go up like this. So, for instance, how do you know the correction is not a market shift? How do you know the correction is not a reversal? It doesn't take the low that created the indication. It doesn't take the low that created the intention. So the low that created the intention that caused the break above the side was here. So anything above here, Anything above here, it's still a buy. Anything above here, it's still a buy. Anything above here is still a buy. So until the market takes out this low, until the market takes out this low, so I can say yes, gold want to change its structure from bearish to bullish entirely. And one thing I want you guys to know is this: structure creates trend. Structure creates trend, and a trend does not change. A trend does not change, doesn't change unless market structure, market structure is changing. What do I mean? The whole idea of a trend is bullish, a trend is bearish. A trend does not change. For instance, this trend that has been happening, this trend that has been happening, that will give us another low. It does not change unless a structure has changed. So when there's a structure change, when there's a break below this low and a lower high being formed, and that has not happened. So the trend is still bullish. It's just that we are just having secondary trends, like on the 4 hour, on the 1 hour, we have just been having bearish trend, and that's going to change because the lower time frame respect the higher time frame. The 1 hour, the 15 minutes will respect the 1 hour. The 1 hour will respect the 4 hour. So the bigger the time frame, the more respect it holds. The bigger the time frame, the more respect it hold. So gold is still going bullish. Gold is still going bullish as far as this structure, this low that created this intention has not been taken out. So I can see this as high, low, higher high, higher low. So like an equal low around this here, but you see an higher low as far it doesn't take out this low. See, the moment the market do as if does in like tries to this point, what did it do? It reversed. It changed the structure. It reversed, and that reversal is going to take it up. So let's scale down to the daily time frame. Let's see what we are seeing. Let's scale down to the daily time frame. Let's see what we are seeing. So on the daily, it's very very easy. I'm seeing it low, high, low, higher highs, higher low, higher high, and I see this as a whole big correction, not taking out this low to give this. So this is my high. This whole move here is my high. All these things above here is my high, and this is my C. This is my C. This is my C. This is my C. And I'm expecting an execution now. Execution should be happening now. So some traders can buy from here. Some swing traders can buy from here. But I don't want to take a trade of 13,000 pips. 13,000 pips, and it's just going to be only 1:4. That's nonsense. So we'll slow down to a little bit time frame for precision. So and I said after an intention, after the market breaks and now you break a low, it gives us a what? A correction. A correction. A correction is an opposite move designed to trap FOMO FOMO traders. And its main objective in a bullish trend which we are on good, its main objective is to create an higher low. So this correction has done its job. This correction here, this whole blizzard, this whole market downtrend that people go is selling, go is selling, go is about to change, go to 3,000. No, this is just a correction, and the whole um objective for the correction phase is to create an higher low. Has it done that? Yes. As far as is a low higher than this one and it's equal to this low here, it's equal to this low here, it's still an higher low. So an equal low is still an higher low, and equal high is still a lower high as far as it doesn't take it out. So we are still good. So now What I'm just doing now is the execution phase. This is where I am. And the execution phase is where you play your entry game. A lot of patience is needed there. This is where you play your entry game. You can't be analyzing a trade, be watching a trade for 1 week and just keep making mistake in the entries. So I want to get the entries maybe once or twice. I missed out the first time. I still know I'm on the execution phase. I can still enter. I don't want to keep trying, guessing my entry. So I need to play a lot of patience in the execution phase. So an execution phase happens when C when C reverses, and C is what? C is our correction phase. So how does C reverse? How does market reversal happen? So on a bearish trend, in a bullish trend, let's say in, intention is bullish. The intention, know that intention is bullish. Correction is bearish. While execution is bullish. So time frame in sync. For you to know where you are, two out of the ICE, one must be an opposite one and the two must be similar. So we have the intention I, correction, opposite move. Execution should be bigger. So execution happens right after the correction reverses, and the correction is bearish. How do you know a bearish trend is reversing? How do you know a bearish trend is reversing in a bullish move? A bearish trend reverses. Note this. A bearish trend reverses, comma, when when the market stop creating lower lows and a lower high. A lower high is taken out. When the market stop creating low and a lower high is taken out. We know for a bearish move, what is characteristic of a bearish move? A market taking out lows, and creating lower highs. And I'm going to do a video on that, on market structure, a full course on market structure, intention, correction, execution, reversals, entry and exit. I'm going to do a video on that. But let's just watch good continuation of the previous video we did. So a bearish trend reverse is when the market stop creating lower lows and a lower high is being taken out. How can I see that here? I cannot see that here. It's not really, I'm seeing it. I've trained my eyes to see because of experience. I know this is a lower high that has been taken out. The market stop creating lows. But how can I see it better? So this is my lower high. So I know that at this point market has given us lower low, lower highs, lower low, lower highs. The market fails to give us a new lower low. This is the first one, and the lower high is taken out. This is it. This lower high at this point, 4,599, is taken out. Bearish trend reverse is when the market stop creating lows at this point. It gave us an higher low. It could not break further down past this one. So this is the first sign of reversal. Then the main one and the second one is when a lower high is taken out, and that has happened. So this is a reversal. So the execution phase starts. The execution phase has start now. But now you cannot enter here. Why? You don't want to buy like the same IC. You put in IC again. You don't want to buy the market breaks and now you need to wait for an higher low, because your buy should always come from an higher low and your sell should always come from a lower high. Your buy should always come from an higher low. So what do? Map out again. Intention. This is a break of an high, and I'll put my alert there. This is an intention. A break above this high is an intention. This is an intention. Market break above this lower highs. Market goes above this lower high. So this is an intention that the market is about to go up, a break above this lower high. So what did I need next now? So tomorrow, New York session, I just expect, or London, I expect a huge pump on gold like this. Then maybe on Thursday, Friday, or who knows, I'll wait for an higher low. And mind you, an higher low, where we will be needing our higher low from is at the intention level. Where we'll be needing our higher low from is at the intention level. Is at the intention level. It will not be, at times it might not reach and go up, but strengthen your psychology to just take it from the intention level. But the main thing is that the higher load that is going to form should not go below this one. The higher load that is going to form should not go below this one. If it goes below this, I'm no longer interested in this trade. It should not go. It can be here, it can be here, it can be here, it can be here. We don't want it here. We want it either here, here, but it should not go below this point. So you do it again. So this is, I'm just saying I see execution. Then you exit, you enter there, you enter here, somewhere around there, somewhere around there. So at this point, you'll be tracking your entries on this one.